This situation is getting crazy, it's getting out of control, and it's happening very, very fast. Not only has AMC been falling through the floor, but crypto has also been falling through a floor, and there seems to be no bottom in sight. You now have Ethereum, which is trading down 9% in the last 24 hours. If we click on Coinbase market cap, or coin market cap, I should say, Bitcoin is down 33.31% in 7 days. Ethereum down 35% in 7 days. This is creating wealth destruction, the likes of which we have never seen before. The notional dollar value of wealth destruction is getting absolutely ridiculous. Crypto was under a $1 trillion market cap like a week ago, right? Before this 30% drop, 35% drop on Ethereum. Bitcoin now trading at $18,998. This is a really, really big deal for a lot of different reasons. That's what I want to get into here in this video, and potentially why this could be worse than what's happening in the equity markets, how this could drag on the equity markets and really be a big thorn in the sides of our backs for quite a long amount of time. Now let's dive into the information here in this video. If you guys want to come trade with me live in real time, link down below in the pinned comment. We have been doing very, very well as of recently, and it's really helped out the portfolios when, you know, everything else is going down. At least you have something that is winning for you, and a lot of that is done with options. So know the risk with trading options before you even join that. But nonetheless, guys, okay, so let's talk about crypto and why this is so different and why this is such a big deal. And the first thing that I want to start with, there's multiple pieces to this, but there's one main point. The first thing I want to start with is the size of money, the amount of money that was in crypto. At the peak, there was over $2 trillion in the crypto markets. Now you're sitting at $838.69 billion, which is still a lot of money, but it's not nearly what it used to be at the peak, right? Bitcoin is down like 60% from its peak. Ethereum is down like 80% from its peak. So there has been a lot of wealth destruction in crypto, but the reason wealth is being destructed in crypto is the same as equity markets, right? The initial reason why crypto started to go down in November, just like the NASDAQ, is because the Fed is raising rates. We've never had crypto accounts in a market environment where interest rates are going through the roof. We have been in a low rate regime for the last 15 years, and we don't know what it's like in recent times to have higher interest rates, which is starting to happen. So that's the initial reason why crypto fell. But on top of that, the lack of transparency in crypto is really going to hurt it for a long period of time. And what I mean by that is, out of nowhere, you have Celsius that comes out and is having a lot of liquidity issues, so they stopped all withdrawals, right? That's not good. You know what that does? That creates lack of trust. It kills trust. So now people are looking at, you know, Gemini, Coinbase, FTX, other platforms, and they're like, hey, are they gonna do that to me, especially if crypto continues to fall? Because in the grand scope of things, Bitcoin in the last 2 years is still up over 100%. It's still, you know, even from the COVID bottoms, returned a lot to those initial investors. So a lot of people are down substantially in their crypto positions. And even if the brokerages are going to not let you withdraw, then what is really going on under the surface? At the same time, hedge fund 3 Arrows fails to meet lender margin calls. And that's definitely causing a lot of fear, and it makes you wonder how much leverage is actually going on under the surface. And then you have Terra Luna that essentially goes to zero overnight. Really makes you question what the hell is going on, and the lack of transparency in crypto markets is a lot different than like equity markets, like buying a stock. If you buy a stock in a company, they are supposed to have their results audited, so you know that they are factual to, plus or minus 1%, whatever the margin of error is for earnings reports. I believe plus or minus 0.5%, 1%, whatever it is. That's all fine and dandy. At least you have a glimpse into what's going on. With crypto, you have no idea. So it creates a really bad environment, bad psychology. Like right now, I don't want to buy any cryptos besides Ethereum and Bitcoin, and I'm not even jumping at that. Not because, I don't think they will make money, but what's going to be the next one that falls? What's going to be what's actually going on? How much leverage is there? Is it all going to fail because everyone's leveraged out and everyone's going to take massive hits? Not even the crypto brokerages can stay in business, right? That's what Celsius is showing us. So it's like nowhere is safe, especially in crypto, and the lack of transparency is really hurting crypto markets, and it's going to take years to get trust back. People are not going to forget about Terra Luna overnight. They're not going to forget about Celsius not letting people withdraw their money, and whatever else happens from here, it's going to take a while. And that's going to be a big thorn in the sides of markets' backs, because you start to get this wealth destruction effect where if you had gains in crypto, you wanted to go out and buy a house. Maybe you did, but now your remaining crypto is down through the ground, obviously. Your housing values start to fall. Maybe you have a portfolio at the same time that starts to fall. So you start to get destroyed just on all different aspects. And when you throw in leverage and margin in that equation, you can start to push and pull from different assets a lot. Like if you had a lot of margin in your crypto accounts, for an example, and you had a stock portfolio, well, if you get margin called in your crypto portfolios, you're probably going to have to break the piggy bank on your stock portfolio to pay for that. And considering the size of crypto as an asset class, still $800 billion, like that's more than all of the margin that is reported to us by over $100 billion, right? So take all the margin in the markets and add another $100 billion onto that. That's the size of the crypto market still today. It used to be much more. So that's why this is such a big problem for equity markets, for all markets, really. They're going to feed into each other. And it wouldn't surprise me after seeing crypto falling this much over the weekend that it does directly feed off into markets, and markets likely fall as well. Now, like I stated here in this video, that crypto and the NASDAQ, or just equity markets overall, they are going to feed off of each other. And the fact that crypto is down, Bitcoin off of its $65,000 high, it's going to be down for a while. It's going to affect equity markets negatively for quite a bit of time. But I do actually expect a near-term bottom for equity markets, at least for the next 1 to 3 weeks, because we have seen such a substantial crash, down 31.5% on the NASDAQ year to date in the first 6 months of 2022. Historically, I believe this is the worst start to a year in like 100 years for the NASDAQ. Well, obviously the NASDAQ has not been around that long, but for equity markets in total, usually this does not happen. And it is a huge buying opportunity, probably the best buying opportunity that most people have ever seen, unless you were actively, aggressively investing during 2008. This is the best time to invest in the markets that you have seen in a very long time. Now, why specifically I think over the next 1 to 3 weeks you could actually see a market bottom is because we closed Friday at the second worst close of 2022. The first worst close of 2022 was actually on Thursday when the S&P closed at 365.07. We closed Friday at 365.86. So it's right there at the yearly lows, or the year-to-date lows. And what we have over the next week as far as economic data is really not much. You have existing home sales, Canadian inflation rate, UK inflation rate, which won't be as important to our markets. You do have initial jobless claims, some things that are not really expected to move the markets. Not too many of these red highlighted timestamps for the US new home sales. There's 2 of them for this week. Not really a lot of data that is actually expected. Now, the week after that, on Monday, you have durable goods orders. That can be more important, and that subsequent week, June 27th, will be more important. But you have the Fed meeting out the way. You don't have earnings yet. You don't really have anything unless we get new information that we just don't know about yet, there's not really a whole lot of reasons to continue to sell off equity markets beyond what we've already seen, because you guys got to realize we've gotten our ass kicked already. That's a fact. So until we get more information that lends credibility to seeing the Nasdaq down 31.5% in 6 months, a very historical decline, then I think we might take a little bit of a breather here, possibly retract even 5 or 10% back to the upside. A 5% move to the upside from here would put us on the S&P at about 385. A 10% move up would put us at about 402 on the S&P 500. So I do think that is possible. A 5 to 10% move back to the upside, like you get these vicious bear market rallies. It's going to happen, but then ultimately I think we will hit lower lows when the markets do realize the Fed is raising rates at a time where growth is slowing down and is negative, aka in a technical recession, and inflation is way too high. The only thing that could really save the markets as of right now is if we see the price of oil plummet for one reason or another, and that does not look likely, at least until Russia backs off of Ukraine, because the price of oil is directly related to a recession and possibly a depression if prices of gasoline and barrels of oil remain so high. Good news is we were down 6% in the price of oil on Friday, but we got a lot more room to move to the downside before, you know, we're out the clear. We've been over $100 a barrel of oil for the whole entire year of 2022. Historically speaking, that has never happened. We've went over $100 a barrel for a couple months at a time, like 2008 when one barrel of oil hit 140, ultimately came plummeting back down to about 44 about 6 months after the peak. That's the only other time that we've been over $100 a barrel, and we had a recession right after that. So I think it's very likely that that's what we get as well coming this time around. A lot of it directly related to the price of energy. So that is going to be all for this video. If you guys found value out of it, hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the description of, or the comment section of this video. Free stock down below in the description of this video, though, with Webull, Moomoo, and Public. Thank you guys for watching. Enjoy the rest of your weekends, and I will see you in the next one.